In a surprise move with global implications, President Donald Trump has announced a major trade agreement with Japan, marking a potential turning point in U.S.-Asia economic relations. At the heart of the deal are four major components: a 15% tariff on all Japanese exports to the United States, a $550 billion Japanese investment in the U.S. economy, expanded access for American products to Japanese markets, a pledge to pursue reciprocal tariffs, pending final confirmation from Tokyo. This is a fair, reciprocal deal that's going to create jobs, bring investment, and boost American industries like never before. Originally, Japanese goods were facing tariffs as high as 25% to 27.5%, especially on automobiles and parts. Under the new agreement, that rate drops to 15%, a move designed to ease tensions and keep trade flowing. The biggest headline: Japan has committed to $550 billion in U.S. investment. If fulfilled, this would be one of the largest foreign direct investment flows in American history, nearly 2.5% of U.S. GDP. Officials say this will translate into hundreds of thousands of jobs across sectors like automotive, agriculture, manufacturing, and even energy, hinting at a possible LNG deal in Alaska. In return, Japan will open more of its market to American cars, trucks, rice, and selected agricultural goods, long-standing goals of U.S. trade policy. Markets reacted swiftly. U.S. equity futures surged and shares in Japanese automakers spiked, signaling optimism from investors. Experts say the deal could boost U.S. GDP through capital inflows and productivity gains, especially if investment targets high-impact sectors like infrastructure, technology, and advanced manufacturing. But some warn that the 15% tariff, while lower than feared, still risks higher consumer prices and supply chain disruptions. Research shows tariffs generally reduce long-term GDP and wages. The big question: will the investment and trade expansion outweigh the drag of new tariffs? Many economists say it depends on how quickly Japan follows through, and how Washington manages future trade policy. If Japan delivers the $550 billion and tariffs don't escalate further, we could see a real bump in jobs and innovation. But if tensions rise, the benefits might be offset. This agreement also sends a message to Europe and other trading partners. Deals are possible, but the US expects balanced terms and big returns. A massive investment, a scaled-back tariff. A chance for deeper cooperation or greater conflict. What happens next depends on diplomacy, delivery, and dollars.